Market snipers, how are you guys? So on December the 7th, when we appeared with Silver Bullion TV, we've appeared with a number of the main precious metals guys with regards to gold and silver. We highlighted this chart here, the macro dollar index chart, and our assertion that the dollar is in an ascending strength period. That was going to be bearish for euro, and hence why we would expect to see euro sell off. Bearish also for FX emergings. Also, as rates are climbing on the debt markets, one of the most important charts is actually the 10-year yield, which has been breaking out. Huge news. Many of you don't understand the debt markets, so I'm not going to bore you with explaining it. I've done a audio boom where someone has tried to ask or successfully asked about the debt markets, and I explain it to them. As yields go up, the values are going down. So there's less money going into purchasing the government debt, and the rates are starting to climb. This is meaning money is going into other asset classes, and we think it's going to be the energies. We'll talk more about that. But why is this bearish for precious metals? So in the same video around about here, we were talking about gold. This was our jaw on the gold chart, a warning quite far into advance that you could in fact have quite a reasonable sell-off, and that the 1680 was temporary or medium long-term support, as you can see by the orange circles, but that there was a risk in a deflationary event you would have a sell-off. We also pointed to silver because everybody's particularly interested in the higher beta silver item, and of course what's good for gold is good for silver, and this was our take on silver over here. And we warned that there's potential head and shoulder structure at the top. You can see it potentially at the blue, and we are leaning on this. And our draw from some time ago with regards to silver was something like this. We'll come back to this chart, by the way, which is dollar divided by silver, and is actually showing a sustained increase in value of energies versus the silver market. So let's get that silver market in there. We warned that a deflationary event would be potentially coming, and that this is going to lean on both Bitcoin for the crypto guys that think they're going to be unique. You're currently not the fastest horse at the moment, and precious metals. This was our scenario that we've had for some time, that we've been sharing, discussing. If you're following us on the Crypto Sniper, by the way, tomorrow, deep dive, traditional markets, that will be equities, indices, tech equities, energy equities we can look at as well, commodities, oil, gas, copper, all the key movers in what is a reset world. We see some deflationary forces, either February or March coming overall. Hence why we've predicted from this point, we were saying this is a strong absence of bid. We predicted a bounce at the key level in and around 22s and a dip back down. Yesterday was terrible. This is a 3-day chart. This was terrible for silver. You could get another opportunity to buy. The last low of the COVID was 11,666. We are seeing at least a run of 13,375 if this head and shoulders is triggered to the downside. Could be the case on a deflationary attack. It could be a banking hack. It could be turmoil in the energies markets as energies go up and countries start to have riots and all sorts of pressure on them with regards to consumers being squeezed in this inflationary realm that we are currently living in. So head and shoulder, we've got a bit of a wind-up structure that we think you've got a right shoulder potential in here. This is what I'm showing you, the RS, and a squeezy with a very flat bottom. This could trigger at least the inverted HVF that we are calling in here, over there, in between the two blue lines, and possibly an even deeper dive. And this would be drama that will be behind this. Big drama, potentially. What does gold look like? Well, gold is also so we are reasserting the fear here. Since this low, we pointed that there would likely be a rally. It hasn't gone far, and it's been pulled in a single set of 3-day candles. Let's put it on the daily. Most of you are used to the daily. You can see how that has come down hard. Let's just reframe, and let's get out of, let's give you full screen mode. You can see how previously you climbed up to the 25s. And now you've come in a single candle virtually from the 22.75s, and you've actually touched right back down at the 22s here. This is not technical strength. Traditional technical analysts will say, flat bottomed descending triangle. This is in fact inverted HVF, very common to get a right shoulder. You can find out more about how we do this by booking a call, and how head and shoulders, traditional technical analysis done HVF method style, dovetails very, very well with the inverted HVFs and upside HVFs, and how you often get structures and patterns as fractals within bigger setups. But never mind, this is a concern call for a deflationary event. Note, it might not be, I'm not saying today, tomorrow, we would expect a bit of support on any run of the 22 level and a third rally point, although I don't think it would get very, very far. And then I would expect a lot of squeezing and skittishness, or possibly extreme low volatility. So either a little bit schizo, a little bit skittish, or one extreme, but most likely very low volatility coming into that as bit of price behavior. So what about gold? That doesn't work out well for either precious metals if there is going to be this kind of dominant. This will also probably have an element of dollar strength to it. Let's just take the eye off. That's a busy chart and very messy. This has never felt for me particularly strong as continuation overall. So again, if I'll just increase the time frame. In fact, most of you will get this. Let's just make the screen a bit bigger. This concern that we've had here is exactly what we were highlighting on the ST Bullion Vault. This is very flat, and these spikes disappear quickly with very brutal sell-offs. Very brutal sell-offs. You come back down, you get smacked down. That would probably, some might argue, be a little bit of a bear flag structure. And this is the 1680 that we were highlighting. That is such a critical level that came all the way from the pandemic element levels. I can just drag that on. If we can do it with one hand, there you go, and put it in here and remind you all of that. See how you touched that level, you touched it again, you touched it again, you touched it again, became a base for that upside flag, and you were all the way through. Call it 1690 on the round number if you want. So there's a concern here, and this is really hard down, hard selling after very unconvincing rallying. There is going to be deflationary strikes for metals, and this is how it's looking for us at the moment. This is not a time to be buying metals. It's a time to be hoarding cash for your bargain basement projection. And as I said, on December the 7th, which is now almost a full month ago, this was what we were warning of early. And we appear on the metals programs, and we don't chill bull if we ain't feeling it. And you can see how the chart was developed and what we were saying here. Go and grab a view if you like. That was on Silver Bullion TV that we appeared, and this is also on our channel. Okay, so that's one aspect. By the way, it was a terrible evening for Bitcoin too. So those that say, we want to see Bitcoin die, that are precious metal bulls, or crypto kiddies that want to see precious metals die, you're spiting your own face, in my opinion. The idea is that anti-fiats want to be strong. The key element that is hurting you at the moment is dollar. The dollar is getting a bid, and hence why I started with the Dixie charts. Oh, that's too busy. You guys won't be able to make head nor tail of that. Let's show you this one slightly less. So there's your smackdown out of that funnel, and you were going really tightly in it, and even that's still difficult to read. We got a lot of annotations in there with the key elements. You can see that spiller thriller, it's brought you back down. We looked at the total. This is in and around 2 trillion for crypto, so it's come back from almost 3 trillion. It dropped almost a third. It was at about 2.89 up top here, just sub 69. Just above 69 would have been a 3 trillion market cap. You just missed running that, and now you are back down at 2 trillion. That is a lot. That's a third of market cap. And on those higher beta cryptos, boy oh boy, they've had a wash of some degree. Actually, it looks on this one that you made the 3 trillion, so I might have spoken incorrectly, and you're now back through. So maybe a little bit of support for a temporary period, but also it's a bit like the silver chart and the gold chart. You could get another rally and back down hard, and then another rally, and then we go again for more downside. I'm a bit concerned for the anti-fiats. Why? Because of the dollar index, and it's not a healthy inflation trade, it's a fear trade. If the Fed is committing to do anything meaningful, it's sure doing a good job about talking about it, but it does come down to also how much they do. If they are going to do anything meaningful and they're going to continue to talk it and they start acting it, what part of the financial system will break? Not if or when, it's like which aspect of it. Will it be repo markets? Will it be FX emergings falling out of bed, not able to pay their debts? Will it be junk debt? You remember the Fed stood behind JNK and HYG, high yield debt. Will those all start to roll and drop again if interest rates start going up? Where's it going to break? Banks. Who knows? But we certainly can see there's quite a difference between the Eurozone right now and the dollar zone. This is a bull flag by all measures, so we could come down a little bit, but the expectation is, given enough time, we will break that to the upside, and continuation is expected. So if I extend the flag a wee bit there, continuation is expected. By the way, this is not the only pattern structure that we have. This is not the only pattern structure. So I want to just highlight why this is such a key element, and why some people that have done the deep dive on crypto and got super leveraged and irresponsibly long have not kept an eye on the traditional markets. They've gone, it's all about crypto, it's all about crypto, it's the new world. Yes, it is. And in the same way, the dot-com boom was all about the new internet world and all of that, but you still have to take your bust along the way, and they do come regularly, and price gets ahead of developments. If we have a look at this, we would argue here, let's take you to the weekly on this, or maybe at least the 3-day, get a bit more data on there. And we will take a full chart. I want to highlight why we are reasonably confident of our dollar bull call. So we are one of few people that were currently dollar bull. We thought Brent Johnson was accurate with his thesis but wrong with his timing, and we then saw the bottoming, and we called he will come into season again, and we recently had him back on the show. Timing is everything. So it's not just about being right, it's being right at the right time. And this turning over here has been very, very, very seminal. Note the fib, 0 at the low and 100% at the absolute high. I want to highlight to you how this neckline for this inverted H and S, head and shoulder, not HVF, 38.2 at 94.471 gave you your left shoulder, gave you this complex W right in the orange that is your head, and gave you a much smaller, very dainty right shoulder that led to the breakout to the upside. We were on this early before anyone else calling dollar strength, and we were getting in touch with Brent and say, we think your time will come now. You were right prosthesis with the milkshake theory, just wrong timing. And now he's coming into his own, and those naysayers are having to eat some crud. The 50% fib running straight through the diagonal of this flag from the bottom left corner going out over there. It's absolutely natural and expected to have a continuation structure at a key fib level. So your neckline is 38.2 at 94. You're sitting at the 96s, 96.1s, and you're having your first kind of rest, and you churn around here. Guess what? There's a target of 99. How do you think your crypto, how do you think your silver and gold are performing when there's a rush into the dollar and they're priced in dollars? Your BTC USD will not be smiling. Your gold will not be smiling. Yes, they will come, but it ain't yet, in my opinion, a flippening event where all three, Bitcoin, gold, silver, will move to the upside on a strengthening dollar. However, for now, it is shown that this run into the dollar has lent on the anti-fiats. The God market of fiat being strong hurts the anti-fiats. It should make sense. Light hurts dark. Darkness hurts light. So anyway, that's the journey, and that's a reminder of the dollar index target at 99.8. Then we get a rest, and during that period, a bit of reflation is potential for gold and silver, which could still, as I've illustrated, dip to the downside. We've given you sub 14 targets for silver, which will just be an opportunity to load up. I don't think at any point on the paper markets you will ever get to see a leverage trade take you to the moon. I think at reset there's a bit revaluation of gold and silver, and it will come as part of the Bretton Woods Mark II moment and central bank digital tokens, and tying some legitimacy to precious metals. So let's have a look at what was the target for the gold, because if we're talking downside for gold, what is going up in this environment? Because the debt markets are going down, what is actually going up? Less things, but energy may be one of them. Let's just delete that. Let's stay on the eye off, because that's a lot of clutter. So in actual fact, I think I might need to leave the eye on. We're working in and around a 1500 dip. Don't forget, you've been running the 1800 repeatedly, but never staying above it for any sustained period. You've been running the 1800 repeatedly on this hard-working chart that looks a bit messy, but it is truly a hard-working chart. Every line is deserved, and you failed actually to make some double bottom targets there and there. We'll take those off. That's feedback. That is telling you the zip to the upside is not as much. So when you get downside targets that are performing and being made and upside targets that are failing, you've got to understand that there's something wrong. On the same Fibbo, 1 down to 0, you have been in the blood basement and the bottom two rows most of the time of the next two rows after the blood basement, the green and the grey-black. In fact, you only had a short spell up top here, and you never made the 61.8, and you were positively slammed. I've already spoken of this downside momentum and slammed again, and this little secondary effort was also stamped on. You've been cycling around the 1800 key level of significance, and overall we see a cautionary basing ascending grind line that I'll put in blue for now, but I normally put in red underneath this, and a deflationary moment, a surge again of dollar strength, will be damaging for the gold market. So keep some powder dry. The gift will be coming. We will be live trading together. We'll deep dive on this far further on gold and silver. I will also show you quickly a change in the relative valuations. If I divide this by US oil, how the energies have turned. Remember, they were the story last year. If we go and we remove the extremities of what was the pandemic, you can see that this is non-stop scaling off down. In fact, in some ways, it's easier for people to see upside charts. So let me go US oil, and we divide it by, note this high point, This is really good squaring up, by the way, for oil. So squaring up after a bit of a broadening structure, it lost some momentum. You can see it there, and there it was getting a little bit thrashed around. Now it is squaring up nicely for upside again. So that one, my take is you're going to do something like this. So with oil reaching higher, that is squeezing. It is applying a lot of pressure. Kazakhstan is blowing up. You think, why should I care about that? It's some godforsaken place a million miles away. No, it isn't. It's a big economy for that region, Central Asia, that has actually was doing very well with energy. That's now looks like a Ukraine insider job set up, peaceful, largely peaceful protesters. That doesn't mean I agree with all the leadership there, but it does look like a bit of a Ukraine setup. They tried Belarus, and now they're trying the same formula there. But the ruse, the cover story is energy prices. Propane was allowed to double. They were using price controls. Key reset video to come on how price controls will be coming back. Remember, they create the inflation with their printing, then they do price controls so that they're always there to help you, which of course breaks the economy because quality goes down for the same price controls, and black markets are formed for the original product of reasonable quality or better quality, and they'll be behind making the money in those environments as well. So, I've got the t-shirt, black markets matter. They certainly will be coming out again, and price controls is it. Don't let's go full reset. You can keep an eye out. Follow the Odyssey channel under the Market Sniper to get updates on what we are calling will come and how you can plan to do that. We will see you for live trading. Link below. Oil is showing relative strength as a commodity in the environment of a firm dollar that is also likely to have another surge if that bull flag starts breaking to the upside. At that point, if it gets too expensive and it gets pulled back, expect a deflationary hit to occur. So oil is still advancing on a strengthening dollar. Let's divide it by a couple of things. We can divide it by gold, the futures, the American gold, COMEX futures, COMEX. Note how the relative valuation, apart from the absolute schizo moment, if we just took that lower, for example, which is pre the very distorting negative value low, you would have had 1% of a gold ounce bought you oil. Now it's at 4%. It gets worse if you do this on silver. Let's put silver futures in there also of the COMEX. You needed 0.69 of an ounce to buy a barrel of oil. Now you need 3.6 silver ounces to buy a barrel of oil. Look at this as it is taking out on the upside. So there you go. It's taking out the upside on the move to the upside. You can see this is a very steady channel. Again, a safe and consistent move to the upside. Energies is how they will get the people in the streets. Gas, electricity, oil, petrol. It will have them rioting in the streets. Look at that channel to the upside. A nice move, and you've taken out the last high. So here we go. Guys, that is our key message. Energies will outperform. However, dollar is a performer, which is putting pressure on the euro. Go watch the euro Swiss franc calls to the short side. Go watch the euro USD head and shoulders to the short side. These are all FX trades. I'm not going to delve in now, apart from the dollar index, which is kind of the euro USD as well on an inverted framing. But the fact that the commodity pricing currency is appreciating is going to be bearish for most anti-fiats, with the possible exception of energies. However, they will still be brought back if there is a major surge in the dollar, but they are growing in significance in this environment. People are turning back to the essentials as tech and growth is unwinding. Okay, guys, thanks for watching. We'll see you for live trading day. There's one option available for one visit, or you can have 3 visits for the price of 2. Pop onto the link below. We'll see you tomorrow, as the non-farm payroll number will also be coming in during that time. Thank you for watching, and we'll catch you next time.